Are you looking to buy a business and you don't know whether you should structure it as an asset sale or a stock sale? Watch this video and I'll explain why, even though buyers typically want to structure things as an asset sale, when I recently represented a buyer on an acquisition, we decided to structure it as a stock sale. So let's start with, first of all, why do buyers typically like to structure buying a business as an asset sale? The number one thing is it's a clean break. It's a clean slate. And the buyer buys the business and leaves, what gets the assets and leaves the liabilities with the seller. It's a fresh start. And that's really a great way to start the buying of a business. The second thing, which people don't talk about it as much, is taxes. And typically a buyer can step up the basis on the value of the assets up to the purchase price and then take the depreciation on those assets. So there's tax advantages moving forward for the buyer. So why did we structure this one as a stock sale? Meaning that the buyer actually purchased the ownership interests of the company and kept that original entity. There were licensing issues, and licensing was attached to the entity itself, and transferring over those licenses to a fresh entity it just didn't make sense. We didn't want a gap in the period that the business could operate. We were willing to accept the risks of the liabilities in the business. We did due diligence, and we had strong reps and warranties in our stock purchase agreement to protect us, being the buyer, because we're stepping into this business. We didn't want a lot of unknowns. We didn't want to get hit with a lawsuit day one after buying this business. But for us, it was still worth it to take some of that risk and actually buy the ownership interest in the business, acquire that actual entity because of the licensing issues. And another thing that I'll just throw this in that I hear quite a bit is the buyer wants the history of the business, this entity, the selling entity. The business may have been in business for a decade or more even, and there is a history, there's a credit history, there's banking relationships, all that kind of stuff. Sometimes the buyer wants those things. Sometimes actually it's the most important thing for the buyer to acquire those things. So if you're a buyer looking how to structure the acquisition, yeah, you can whip up an asset purchase agreement. You can even whip up a stock purchase agreement, but the devil's in the details. And also working with an attorney will help you spot issues. Look around the corner where if you're DIY, you're not going to be able to spot those issues. You're not going to be able to know the questions to ask and the hidden things around the corner. So I always highly advise working with an attorney, whether it's us at Johnsen Law or someone else, but someone really experienced in mergers and acquisitions, someone that has handled these things a number of times before. It's insurance. Then the money you're going to spend on that transaction for the lawyers is going to be a lot less than dealing with problems and litigation later on.